Hi there and welcome back to this week's trade recap, and this is really simple because this week I only took one trade and it's exactly right here. It was on Wednesday during FOMC. So there are a lot of trades that I could talk about this week that I didn't take but I should, but that's the same as usual, so I won't do it. I will only show the trade that I took. So here during FOMC on Wednesday, we were on a bearish trend, but right here we left this buy side liquidity, we left this trend line liquidity. This is really good liquidity, and on FOMC we tapped once again this trend line, and I was waiting for us to take all of this liquidity. So my bias was bullish and my draw on liquidity was this high. And zooming in here on the 1 minute, we see that after touching this, we started having some rough PA. This isn't something that we really like. And we left this 1 minute. That could be one of the trades that I didn't take that maybe I should. Because right here, we created this low inside of our value gap, we swept it and created this intermediate term low. So right after it, we went back up. And if we zoom here on the 30-second, because in my opinion, this is the most obvious time frame, and this was where I took the trade, and right here we had this 30-second BPR. So I understood that because we already have this BPR, we should hold it if we are really bearish. But if we don't hold this BPR, and we have already tested it, if we don't respect it once again, this isn't bearish. This just confirms that this is bullish. So I hopped on this trade and I entered right here with this stop loss and this target, which would be a really great trade, but I placed my stop really close to the entry, because here on the 30-second we have this high inside this fair value gap and we swept it. So to my understanding, this is a rejection block, this is a protected high. So when we tapped the rejection block on this wick, I went break even, the market stopped me at break even for almost 1 or 2 ticks, and then it went straight to the whole draw on liquidity. If we go on the 1 minute, this isn't a rejection block, this is just a high inside of our value gap. It's an intermediate term high, so if we take the intermediate term high, we should take the long term high. So if we inversed this 1 minute just like we did, I could have taken this trade after it. There were a lot of opportunities I wasn't able to capitalize. I should have held the break even because this trade was really good. We inversed the BPR, we were on a bullish trend, and we had a bullish on liquidity with great liquidity above. I should have held the break even a little bit more because this BPR on the 30-second and also on the 1 minute should hold us, should act as support. But I didn't. I wasn't that confident on this because this PA isn't the best. If we go on a 3 minute, we can see again that this isn't the best, but this was a trade that I should have held and it cost me a lot of bucks. There were a lot of trades that I could have taken this week. Just on this day, we had this 5 minute that I could have taken as well. This was the last gap that was holding us. So when we inversed it after respecting this 1, 2, 3, 4 times, after inversing this with another block here on the 5 minute, this would also be a great trade for me to take. There were a lot of opportunities this week, I won't lie. I should have taken a lot out of different trades and I could be up a lot, but I'm gonna end the month red. I have 3 losses, 1 win and 1 break even. That's the month for me, that's the July. In August, things tend to be the same as July because these are the summer months, but let's see what we can have. The market is really low and I will probably in the next weeks be buying for long term. I will buy some CNDX and maybe some SPX. So that's really it for this week. Thank you so much for watching. I'll see you in the next one. Subscribe if you want to watch more. Bye bye.